What's going on, guys? It's your boy NTG back at again with lesson number 2. So this is going to be lesson 2 of the full course series. So if you're just watching this video for the first time, make sure you watch lesson 1 and then you're going to come back to this lesson so that you guys are doing it in order. And remember, I have my playlist on YouTube, so just go to my channel, hit playlist, and then you will see all the lessons in order. You have to watch all of them in order to make sure you understand everything. Now, if you're just here because you already knew what was going on with lesson 1 and you're like just jumping to lesson 2, that's also fine. Just make sure that you know all the information prior to this video, okay? So in today's video, we're going to be going over how to analyze charts. So in lesson 1, we did a lot of PowerPoint presentations and a lot of definitions and trading terms. So in this video, it's going to be all charts. So we're going to be going through everything chart work. So today we're going to be doing charts, how to analyze the market, support and resistance, and we're going to end off with Japanese candlesticks. All right. So I'm going to be going over, pairs. The first video is going to be how to use TradingView, and then we're going to go through drawing, support and resistance, how to analyze the market, and then we're going to end with Japanese candlesticks. All right. So without further ado, let's go ahead and get straight into the video. All right. So here we are on the charts. So I'm going to be drawing out some things, candlesticks. We're going to be going through everything that has to do with the market so that by the end of this video, you guys understand what Japanese candlesticks are, how to draw support and resistance zones, how to analyze the market. You'll be able to pretty much cover more than 70% of what you need to know when it comes to price action. So this first part of the video, I'm going to be going over TradingView and all the tools that you guys will need to, how to use it, how to navigate through TradingView and things like that. Now, if you already know how to use TradingView, then you can go ahead and skip to the next part. I will have the timestamps below in the description, so you guys can go. If you already know how to use TradingView, then you don't have to watch this segment. You can just jump straight into like the price action or the drawing of support and resistance and things like that. All right. But for my people that are completely new, that have never used TradingView, all right, so this is what it's going to look like. So if you go on tradingview.com, I recommend just getting a basic membership. So I think it's like $14 a month. You guys definitely need to, I recommend getting the membership. I mean, you're paying for your tools essentially, right? This is for work. So, you can't do a job without your tools, or, you're a mechanic, you have to buy tools to work on cars and things like that. So this is a trader's tool. So yes, you have to put investment in yourself to get that membership so that you have the tools necessary to make analysis. And you can use MT5 or MT4 if you are still using MT4, but I like to draw my analysis on TradingView. Everything here is a lot cleaner. Or if you use TradeLocker, I still do my analysis here on TradingView, and then once I get like my entry points and things like that, then I'll use the proper, like my broker, to just enter trades. Okay, so for this part here, TradingView, now there's 2 modes here. So let's go over like the dark and the light mode. So if you guys click here right on the left hand corner, you can actually change that. So let's just say you like the dark mode and you want to use the dark mode. Oh, where's mine? Here we go. So you go here and then go to app settings, and then you guys will see here you have the light. So it'll change it to the light settings. If you don't like the light settings, you can do dark. I personally like dark. It's just a little bit easier on my eyes, especially when I'm trading at night. I just like to be able to actually see my screen. The light mode is a little bit too bright. Okay, so now let's go over the charts and the drawing tools. So let's do the charts first. So if you double click on the charts, you can actually customize the color of your chart. So if you want to change it to orange, or you like blue candles, you like purple candles, you can do all the changes here, from the body of the candles to the borders. And then you can actually save, the color as a template. So here I have my gray chart. So if I just click my template here, you'll see that this is my gray charts here that I use sometimes as well, that I want to switch off here, right? So you see here, I got my blue candles as bullish, my black candles as bearish, with a nice clean charts here. and then double click it again if you want to change it. You know, I like to change the color of my candles every now and then. I don't know, I just like to refresh, look at new things, not keep it the same. So, but this is what I have right now as the default. So this should be the default here. Bar change, you don't really need any of that stuff. The indicators, the values, that's not really important. Countdown bar, so I like to check that off as well because it most likely will be checked off. So I like to see when the candles are going to close, so I just click that on there. And then what else that you may need? Nothing here. Canvas, if you want to get rid of the lines in the background, go to the grid lines here, and then you can just drag it, and then you can get rid of the grid lines just like that, so you don't have any lines in your background if you don't like, you know, the whole line look there. So that's how you would get rid of that. And then let's see here, crosshairs, replay mode, you can take that off. So that's just like the watermark when you go into replay mode. So if you have this checked right and you go into replay mode, you will see it. It'll be like right in the middle of replay mode, which is kind of distracting. So you can just take that off and then it'll be gone. So that's good there. And then pretty much that will be it. I don't think you guys will be connecting to any broker, so you don't really need to focus on trading. So yeah, so that's pretty much that. That would be all of the, just quick and easy, just how to change the colors, everything. We can take this off, the trading history. All right. On the symbol is not still up. Oh, okay. Sorry guys. So when you go to symbol here, you'll find the symbol there right under the countdown bar. You can just click on name and then you'll see gold will pop up there. So you can get the symbol name on your chart, so you know what you're trading. But that's pretty much it for as far as just the candlesticks and the canvas of your charts. Now let's go over to the drawing tools. So if you need access to like your trend lines here, they'll be all in the left hand corner. So if you click this little arrow here, you'll see you'll have trend lines, you'll have your ray, pretty much all different tools here. More like advanced tools. You guys don't need to worry about all that stuff. Really what I use here on the trend line side is my trend line, and you can actually favor it as well, so that you don't have to always keep coming here to click on it, right? You can just start and then show favorites at the bottom here. So if you click that little star at the bottom, you see how my favorites disappeared. If you click on that, it will reappear, and then you can just grab your tools right there. So whenever I need it, I can just do that, draw my zone here. It's all right in front of me. So, but it takes a lot of time when you're just trying to search for what you want, because there's a lot of tools here. So favorite, put it as your favorite, and you can just like quick snap it and just boom, right there. It's all in front of you. So my favorites, trend line, ray, and then for Fibonacci's, I have the retracement, fib extension. These are all tools that I use. I don't use any tools here. As far as patterns, I have my long and short positions, ghost feed, price range. So it just tells you price range, data range. And then I have my arrows. Now my rectangle, I will suggest you guys cover this as well, because this is what we're going to be using a lot to draw zones, support resistance zones, circles. And then you don't need anything here as far as text, unless you want to like write things on your charts. You can have that there, but that's not really necessary unless you just like to put notes on your charts. And then a really good tool that you may pick up is this draw lock tool. So this is the keep drawing tool, and this won't be the default. So with that tool, it allows you to continue to draw. So let's say we're like analyzing the charts and we want to draw out our zones. Now, every time you click your zone, you have to keep clicking it, and you have to keep clicking it. So to avoid that, you'll have this keep drawing tool on, and then it will allow you to just click and keep drawing as much as you want. And then when you're finished, you can just right click and then it'll go away. So that tool, it's very simple, but it's very, very useful, especially when you have to draw out like a lot of zones and patterns, definitely essential here. So that would pretty much be it for the tools that you guys will need. These are the tools that I use. I mean, you can always experiment and add more, but this is pretty much all the tools you're going to need to draw your zones and draw your trend lines and things like that. And then we have market replay mode here. So if you guys ever want to like back test the charts, if you guys ever want to back test, you can just use market replay mode. And what that does is it just replays data. And if you want to practice your price action, you have the little play button here, fast forward button here, to where you can just practice your price action. Just say you want to practice, be like, oh, let me just enter cells here, and then just randomly, and oh, let's see how this plays out, you know. Oh, we were so close to the TP. What? But yeah, so we just practice here. You can back test a strategy, something that you want to use on a day-to-day base. You can use market replay mode to back test. And then alerts, you guys can set alerts. So you just click alerts, and then you can set it to the price. So let's say you're at work or something and you want to get alerted, like, oh, okay, alert me when price is at this area. So you can put it as a cross and select your pair, and then you can create the alert so that once price crosses that area, then you'll get alerted, and then you'll know exactly what the market is doing. So pretty much that. And then the time frames is up here. You can also favorite the time frames as well. So you'll see here that I have a lot of my time frames up. So you can just click there. Whatever time frame you use, you can add it to your favorites. And then you can also add a custom interval. So any custom, like you can do like the 53-minute time frame or anything crazy, or you can fast kick it, and then you can just go like that, 53 minutes, and then boom, you got 53 minutes there. So you can do 75 minutes or 22 minutes. You know, you can click whatever interval you want to adjust to that time frame. So that's pretty much a quick run through of, you know, how to use TradingView. And then if you guys have any more questions as far as more advanced technique. Oh, and last thing before we finish the tutorial, last thing. So you can click here and you can split charts, so you can watch multiple pairs. Now, depending on the membership you have, you probably be limited to 2, 3, 4. You'll see in your membership of how many charts you can have. You can have up to like 16 pairs, but that's a little bit ridiculous. We don't have to watch that many pairs at the same time. But yeah, and then lastly is the watch list. So if you guys want to add your favorite pairs, you come up here and you can search your pair. You can hit add to watch list, or you can right click the symbol. Oh, you don't have to right click, you can just add it. There we go. So you have the add button at the top, and you can add whatever currency, whatever stocks, futures, forex, crypto, and you just hit add, and it will go directly to your watch list right here in this corner. So whatever pairs you trade there, you can add that to your watch list. So that's pretty much a quick tutorial on TradingView. And then I'm pretty sure they have even more in-depth tutorials on YouTube if you guys want to get more into it. But without further ado, let's go ahead and get into our price action trading. So this is what you guys wanted to know about how to analyze the market. So first things first, let's go ahead and go over the 3 types of market conditions. So we have a bullish market, a bearish market, and a consolidating or ranging market. All right. So let's go ahead and go over those conditions first. So in the bullish market, we create higher highs and high lows. So this is exactly what a bullish market will look like. So to highlight this, All right, so you guys can see here we have our higher highs and our high lows. So why is this important? Because this tells us a lot about the market. This also gives us opportunities to enter a trending market. All right, so this will be a trending bullish market here, and this gives us opportunities to enter the trend properly. So the first mistake that a lot of new traders do is they try to enter a bullish market at the top. So they find entries at the higher highs instead of at the high lows. And this is what you create a perfect bullish market. And why is this a perfect bullish market? Because if you also pull out the fib extension, which can be a tool to enter trending markets, right? So you'll pull up your fib extension, and if you measure from the bottom of the low, from the recent high low, and if you take it all the way to the recent higher high, these numbers here, there's 50% retracement and the 618 retracement. That 56 is my own custom retracement area. But if you see here, this is a common known area that traders like to look for retracements to actually enter trades. So instead of entering at the top and losing or having a really, really bad position, we enter at the high low. It enables us to have the best position in the market so that we can continue to hold long term. And then we keep doing the same thing. So once we have our position there, we wait for the bullish trend to continue. This higher high becomes resistance. And if you see here, we have a perfect bounce. So this resistance breaks and it becomes support. So we have two areas of confirmation. Not only that this area becomes support, but it also, if we drag again, we have another 50% retracement. And you see how I was able to draw it out without even measuring before. It's just when you're trading in the market so many times, you start to see these things by naked eye. And the more you trade, you'll be able to also recognize this by the naked eye. You won't even have to really draw retracement. You just know, you look at the market and you see how it retraces, and you know exactly when that retracement area, where that area is at. So from that point here, this is where you can add again, and then so on and so forth. And you can keep building up all the way up into the peak of the high and then close all your positions. That's more of like a swing trade, but this is just an example of what a bullish market would look like. Again, so creating higher highs and high lows. And if you draw the fib retracement again, another perfect retracement, right? You draw this area of resistance. Now you see this time the market didn't bounce immediately off of that resistance that should be support. Sometimes the market likes to dip a little bit below the zone. We're going to talk about that in the video, which is completely normal, completely natural that the market would do. People call this many different things, liquidity grabs, fake outs, stop loss hunts, you name it. We have a lot of names for it, but deeper retracements is normal with the bullish market before it continues for more buys. So this is what a bullish market will look like. So now let's go ahead and look at a bearish market. All right, so pretty much it's going to have the same principles as a bullish market. All right, so let's take this. Now with a bearish market, we have lower lows and low highs. So this will be a bearish market with sells. All right, so we have lower lows and low highs, lower lows, low highs, lower lows, lower low, and low high. And the same thing, the same principles with that bullish market. We will pull the fib retracement again to measure our retracements, Same thing, going all the way down the line from the recent low high all the way down to the lower low, and you'll see our retracements here. So that's what it does. So the market creates a lower low, retraces back to the 50%, creates a low high, comes back and breaks that lower low, which would have been support, becomes resistance, breaks again, lower low, breaks again, and lower low. So that is a downtrend. And the same, like I said, the same principles with the uptrend with the fib retracement. We'll use that same principle here, but it's just going down. Okay. So we have a bullish market and we have our bearish market. And then lastly, we will have a consolidating market or a ranging market. So a consolidating market is when price ranges between two price points consecutively, consistently. Okay. So we're just here bouncing off of price. So you guys see this. Every time price reaches at the 37.40, we see buys. Every time price reaches at the 38.75, it goes back into sales. So this is what we call a sideways or consolidating market. So it's completely sideways. It's straight. So there's no trend. So there's no highs being broken. There's no lows being broken. It's consistently staying straight at the same price levels. So this is one of the worst times you want to trade. Okay. Now I know there's a lot of traders out there that trade consolidated markets. It's very tricky. A lot of trickiness with the market when it's consolidating. I'm a trend continuation trader, so I rather to trade the trend. It's a lot smoother. Just wait for retracement, boom, get my profits, and just continue with the trend. So we don't want to go against the trend, but a lot of traders love to take advantage of this market conditions because, especially with scalpers, they love to scalp the bottom of support, get out early, and then start selling again. Buy again, sell, buy, sell, buy, sell, right? So that's what they like to do. They like to do those things. But we're going to go over confirmations. So when we're hitting support and resistance areas, we don't want to just buy and sell at those areas. We need confirmation. That's where Japanese candlesticks are going to come into play. All right. So let's go back to our candlesticks and let's see how we can draw our support and resistance areas. Oh, and lastly, for my new traders, if you don't have the Japanese candlesticks, I don't know why I didn't go over that. The Japanese candlesticks you see here at the top, you will have different candles. So you have bars. Your chart might be a line chart. I'm not sure how it's set on default on Trading View. It should be candles, but if you're looking for Japanese candlesticks, you just click on candles and it'll be there. So I did not cover that in the beginning of the video. So if you're still confused on how to get that, that's how you do that. So let's go ahead and talk about drawing support and resistance. All right, so I have a blank chart here for gold. Now let's go ahead and talk about support and resistance. So what is support and resistance? Well, support is a buying area. Okay, it's a buying area where price has shown previously that we had a nice buy area. You guys see here we have that push for buys here, and once price comes back to that area, buyers push the market back up. So that's support. Easy enough. It's support. Like, think of support as like you're holding something up, right? You're supporting something, so you're holding it up. That's what support is. So when you draw these zones, you see where buyers are wanting to buy the market back up again, and then these are where the areas you want to look for confirmation to buy. And then resistance is the opposite. So resistance is where sellers want to keep pushing down the market. So just think about something resisting, right? Resistance. Once it comes back to this resistance area, it pushes the market down. We show levels of resistance again, and it pushes the market down. So resistance is where you want to look for sells, and support is where you want to look for buys, right? But we will talk about how we can trade support and resistance soon, okay? But I just want to show you guys how to draw out these areas and the significance of drawing out pure support areas. So for first time traders, you know, they're like, oh, okay, yeah, so I see support here, you know, when they're first drawing out their tools. Oh, I see support here, I see support here, I see support here, you know, and they can't really, they have just a bunch of zones on their charts, right? When I see new traders charts, they have like 1,000 support areas drawn out, okay? And then their charts look really messy, and they have resistance up here. The charts look really messy with all the resistance up, and they have so many levels here, right? So how can we avoid this? Well, what I normally tell my YouTube and my Academy members is to focus on the significance of the move. This is what's going to make the difference when you're drawing support and resistance. So what is the significance of the move? So if we get rid of this, right? Too many support areas, right? We don't know what we want to do from here. Now, if we look at the significance of the pressure, okay, this is where we're going to draw solid support and resistance. So I'm going to draw a resistance here. So I'm going to draw two resistance areas. I'm going to draw one here, and I'm going to draw another one over here. Okay, so we had a little bit of resistance here. You guys see here, right off of those buys, we came to this area here, it showed resistance, and we came again, it showed a little bit more resistance, and it came back, right? And we broke this area. Now, why wasn't this area, why wasn't price pushing a little bit more? Why wasn't it heavy sells? Because you have to focus on the overall move. That's what you need to focus on. I want you guys to see the difference between these moves. All right, so you guys see here, if we look at the significance of this area, what do you see? It's not too much selling pressure. If we're comparing resistance areas, what's the difference between here and when price hit here? Right, you see the difference between the actual movement. So this is what I tell new traders to focus on, is how powerful was that area, right? So you don't get stuck just drawing little areas, every single area that looks like support, or every little area that looks like resistance. What's the significance of that area? What's the back history of that area? Was there a lot of rejections when price hit that resistance? Was there a huge move after it hit that area? Those are significant things you have to ask yourself to make sure you're drawing your pinpoint resistance and support. So if you see here, this move, this huge move, right? And then you see the market starting to push back up for buys. Well, yes, you can still draw out this resistance, right? But it's not, you're not going to be too convinced that the market is going to push all the way back down here. But once the market starts to push back up to this resistance, you can look back at this area and you can say, oh yeah, when price came back up to the 34.38, we had over a 3,000 pip move from top to bottom. All sells took over from top to bottom. So we know once we get back up here, this is going to be a significant area to look for sells. If we get confirmation, that's the biggest thing there. If we get confirmation, okay? And we're going to go through that at the, towards the end of the video on how to get into these confirmations. But I just want you guys to look at this significance here between the sells. And then again, to present price, we came back here for a third time. Why was there so much heavy selling pressure? Because we know from May, when price hits that resistance, heavy selling pressure. Again, heavy selling pressure. And then what do we do again? heavy selling pressure. So we know this is a strong and significant area of resistance. So this is what you want to look for when you are drawing your support and resistance. Okay. And depending on the time frame, of course, the pip range and everything's going to look different, but this works for all the time frames. So even when you're on the 1 minute time frame, right, you want to look for that significance of the buying area. If you're on the 1 minute, how far was the move? How much did the market price reacted once we got to the support or the resistance? We want to be able to see these things in the market. We don't want to just draw out support whenever, however we want, and then we just have a bunch of clunky support areas, okay, and a clunky resistance areas. We don't want that. Okay, we want the most powerful and significant areas, so that we're not getting any fake outs, or we're trying to buy some weak support and it wasn't even support at all. We want to avoid that as much as possible. So this is a quick trick tool that you guys can use when you guys are drawing your zone. So I really want you guys to emphasize and look for these areas. Okay, and now how to draw it. Okay, so drawing is easy. Drawing support and resistance is extremely easy. Okay, so how I like to draw it is I like to get to the opening and the close of the turning points of the candles. Okay, so we're gonna talk about what the Japanese candlesticks are right after I explain how to draw the zones. Okay, so I like to get to close, the opening and the close of the candles. So I'll just mark that up first, and then I just cover about, I want to say about 90% of the wick. I don't cover all the wick, so because my zones become like too big. Like if you've seen some charts and traders have their zones like this big area, I don't really like to do that. I like to have my support areas very nice and clean, very precise. Okay, I want to get as precise as possible, and sometimes I'll even do something like this. Okay, so I can show you guys real quick on how I draw my support. So sometimes what I do is I'll start on the higher time frames. So, you know, like I was saying before, with drawing out like really big zones like this, you know, because it's a big price range, right? You're talking about like a 200 pip support area. That's really big for my taste, because I'm a scalper and a day trader. So I like my zones to be very precise. I want to get the best entry as possible. So sometimes what I'll do is I will go to the lower time frame. So I'll start off on the 4 hour to draw my zone, and then I'll chop my time frame down, and I'll look to see where that turning point is. Oh, okay, so we have that open. Remember that opening closing candle? So now I can kind of just bring that zone down, condense it a little bit more. I can even go down to the 30-minute time frame, look again. Ooh, okay, so see, now I can even condense it even more. So I can put it right there, cover a little bit more of the wick. Sometimes I can go down to even to the 15-minute. And then if we go to current price, right? So that zone went from being 200 pip zone to a 50 pip zone. So you guys see here that I spared myself 100 pips, 150 pips worth of a zone. And then what I can do now is I can work my time frames, and then boom, look at that. Perfect entry on the 5-minute. And that's what a true scalper does. Perfect entry, no drawdown. I wasn't in this liquidity grab or stop loss hunt grab, whatever you want to call it, because just because I changed the preciseness of my zone. So instead of having that huge 200 pip wide zone, which is unnecessary, right? Because I would have had all this support here, right? But where is the market actually going to turn? So instead of doing that, I was able to chop down to each lower time frame, lower, until I got this nice precise area that I waited for my confirmation, and look at that turning point. Beautiful. So that's how you want to draw your support and resistance areas. That's the best way, in my opinion. This is how I draw my support and resistance area. This is my own technique that I'm sharing with you guys, so that you guys can draw out perfect support and resistance areas. So now let's go ahead and go into Japanese candlesticks, and then after we go through Japanese candlesticks, I will show you guys how to trade support and resistance. All right, so let's go ahead and get straight into it. Right, so we're just going to talk about Japanese candlesticks in this video and the importance of Japanese candlesticks, right? Because Japanese candlesticks we pretty much use for everything, right? For entering trades, exiting trade, trend directions. So it's very important to understand the concept of a Japanese candlestick, right? So let's go ahead and draw out our candlesticks. Okay. So we have our bearish candlestick there, right? And then let's go ahead and draw out our bullish candlestick here. Okay, so we have our two candlesticks, right? You guys know that this candlestick that is bearish, right? We're just going through the basics, the very, very basics. Okay, so this is going to be the high. This is going to be the high of the candle, right? These are the highs. And then these are the lows right here. Now, for a bearish candle, right? For a bearish candle, this is the opening price. The opening price for a bearish candle is at the top, right? So we open the top with the candle and we close at the bottom. For a bullish, we open from the bottom and we close at the top. Right. So pretty much this is the basics of, how a candle opens, how a candle closes, where it closes, all that good stuff, right? Everyone knows this. This is basic things. Just in case you didn't know, this is how candlesticks are, right? We have the open, we have the close for bearish, and we have the open at the bottom for bullish, and we have the close at the top, right? Understanding candlesticks is definitely something you can learn to identify, like I said before, entries, reversals, trailing, your stops, getting into more trades. There's a lot of things you can use for Japanese candlesticks alone, right? So what are some ways we can use Japanese candlesticks effectively, right? So we know what they are. We know the closing openings of bullish and bearish candlesticks, but what are some of the confirmations, different formations that we can look for with Japanese candlesticks, right? At rejection at price. So let's say we had a nice zone of support. So we have a zone of support here, right? And we're just waiting for the market to get to our zone, right? So we have the market push down right at the zone. We were like in a nice downtrend, right? Making low highs, low lows, low highs, right? And then we reach this area, right? So we have our candle form. So let's try and do this in live time, right? So the hammer forms, right, when the price opens up and the bears take control, right? We're continuing to the downside, right? As we're hitting the support. As we're hitting the support, the bears are taking over in the market, right? So let's put this here, right? It's like, so they're taking control, they're pushing the market down, they're pushing the market, right? And what happens is how the hammer forms. Let's lower this a little bit so we can actually get that hammer. There we go, right? So what happens is the opening candles here. So bulls start to take control, right? They start to take control, and then all you see is a wick. Now it's like a doji, and then it comes back and it closes as a hammer, just like that, right? And that will be your confirmation to enter a buy, because this is a reversal. So you enter the buy there, right at the hammer that was at that support. So this is how you can use the hammer here, okay? And I'm going to continue to draw out the rest of the patterns, right? So that's pretty much a small summary of the hammer, all right? So let's go ahead and move over to the engulfing, right? But I like the 1, 2, 3 engulfing. So let's draw out our zone of support again. You guys know 1, 2, 3 engulfing. You guys are familiar with this pattern here. You guys know this is my favorite Japanese candlestick pattern. So let's go ahead and talk about the engulfing first, right? And engulfing is just any candle that engulfs the next candle, right? So we have a bearish candle, right? We have a bearish candle right at our zone. I'm trying to draw this out better. There we go. So we have a bearish candle here. Go ahead and mark it up. And then we have our bullish engulfing. Draw out our next candle here, right? The opening price will be there, and we will have our bullish engulfing candle. Just like that, right? So we have our bearishing, and then we have our bullish engulfing. So pretty much all it is just the bullish, the bears in the market got engulfed by the bulls, right? So this is a bullish engulfing. So you will enter here. But what I don't, now you can trade the engulfing this way, but what I just seen is that the 1, 2, 3 engulfing is definitely eliminates a lot of false entries. So what I like to see is actually 3 candles work together into a formation, right? So let's go ahead and draw out the 1, 2, 3 engulfing. So we can keep this, right? But all we're going to do is add an extra candle, right? So we're in a nice downtrend, right? So let's go ahead and draw out this candle right here. We have our candle right here. That's a little bit too far. Let me go ahead and clone that. Perfect. All right. So let's move it closer. Good. Okay. So we have our 1, 2, 3 engulfing right here. I want to move it a little bit, just a little bit closer. There we go. So we have one candlestick here, which is bearish. So we have our first candlestick, right? Which is here. We have our second one, which is also bearish. So both the first 2 candles have to be the same, right? They have to be either bearish or they have to be bullish if you're going for sells, right? And then our third candle is going to be the actual engulfing candle. So our third candle is the actual engulfing, right? So this is the actual engulfing candle, and these 2 are the 1, 2 bearish candles. And this is how we get our 1, 2, 3 engulfing candlestick pattern. And this is where I will enter my trades here, right? And you can use these for trend continuation. You can use this for reversals. You can use this for scaling in for re-entries. You guys know I love using these for re-entries, and also the breakup zones. You guys know I love to use these on confirmations. I love to use these on retest of patterns. This is like my most versatile Japanese candlestick pattern. It can be used for anything. So this is the exact reason why I love using the 1, 2, 3 engulfing. Just so much confirmation that comes through it. It's such a strong confirmation. It's rare that the 1, 2, 3 engulfing would fail. It's very, very rare. So this is why I love using the 1, 2, 3 engulfing. I know you guys had some issues with the 1, 2, 3 engulfing, but either way, this is how it will use. And then I will show you guys a quick example of how it will look in a bearish market, right? So if we had some sort of resistance here, so let's go ahead and draw out our resistance. Okay, so we have one candle. This time, this candle is going to be bullish, right? We're going to have a bullish candle. So we have our bullish candle here. And remember, guys, it has to be the same candle, right? So we have one. Let's go ahead and draw out our second bullish candle. Normally what it does is it likes to touch the zone as a rejection, right? So sometimes it'll even give us that wick to show rejection. And then we have our bearish, right? So this time we'll actually have a bearish engulfing. So let's go ahead and clone that as well. But this time what's going to happen is it's going to engulf that pattern, right? It's going to engulf there. So it's creating that 1, 2, 3 engulfing. And this is the example of a bearish 1, 2, 3 engulfing right here. So we have 1, 2, and 3. Very, very simple. Very, very, very simple. Easy to understand. I think this is like the most detailed I've ever broke down the 1, 2, 3 engulfing, but this is, if you have any questions about it, this is how the 1, 2, 3 engulfing looks. So I'm glad I made this video, because now that somebody asked me to explain this, I'm just going to refer you to this video. All right, perfect. All right, so that's the 1, 2, 3 engulfing. Now let's talk about the famous inside candlestick. All right, a lot of you guys keep asking me about the inside candlestick, right? AKA piercing pattern. It doesn't matter. It has multiple names. I like to call it the inside candlestick. So the inside candlestick only has 2 candles, right? So it is a reversal pattern. What it does is it makes a very bullish engulfing candle, and then next to the second candle is actually smaller, right? So it's actually in the inside of the candle. And that's why I like to call it the inside candlestick, but it has its name of piercing. You guys can go through whatever you want, right? So how would that work, NTD, right? So let's draw out our zone again. So let me show you exactly what this candle will look like. So we have our, right? We touch the zone here, and let's say it shows some sort of rejection, right? So this is a bearish market right now, and we're trying to catch the reversal. So we have our bearish candle here. And what normally happens is the inside candlestick, right? It forms on the inside of the candle. So let's go ahead and draw out the candle here. Right here, right? So we had the opening, we had the close of it, and then what normally happens is it's going to be bullish. So this is exactly what it will look like here, right? This is exactly what it will look like here. Creating some sort of a wick. And this will be the inside. And this is where you want to look for the entry. So this will be the entry point. That would be the entry point there. And that's exactly where you want to look for the inside candlestick for a reversal. So let's say this is a daily support, 4-hour support. You can look for this confirmation here, and you can enter the trade that way. And then the same works for a sell, right? So I always give you the visualization of the sell as well. So we're here just breaking it down, right? For the sell. So let's go ahead and draw that out. We have our bullish, right? We have our huge bullish engulfing candle here, right? Showing us signs of bullish continuation. But then we open here. We create a wick, and this gives us like an inside candlestick, right? And the wicks don't matter right now. We're going to talk about wicks as well afterwards. But right now, we're not looking at the wicks. Okay, you don't need to look at the wicks. You just need to focus on the body formation, right? Unless the wick is part of the candlestick pattern. And then boom, there you go. And that's what the inside candlestick will look like, right? You want to make sure that the inside candlestick is more than 80% of the body. So what do I mean by that? So if you guys see anything less than this body, it's going to be an invalid candlestick, right? You need to have at least 80% of the body. Now this is NTG's confirmation for inside candlestick, because I don't just trade any type of inside candlestick, right? So if the inside candlestick look like this, that's not an inside candlestick to me anymore. Now it's starting to form into either like some sort of a doji, morning star, hammer, whatever. That's not an inside candlestick, right? Here, that's not an inside candlestick, right? This is not an inside candlestick. I need to see at least 80%, right? Covering, right? And this is where you will look at the wick as well. If you see that wick is too short, then you know this is not an inside candlestick. NTG said it needs to be at least 80%, 80 to 90%. It needs to be filled, showing little wicks. It has to be a very tiny wick or no wick at all, right? It has to be no wick at all, but it still has to be in the inside. It can't engulf it, because if it engulfs it, then it's an engulfing pattern, right? At least 80 to 90% has to be on the inside. Same thing with the bullish engulfing, okay? So that's a very, very, very key note there that you guys need to understand with the inside candlestick. All right. Do you guys have any questions so far on the candlesticks? All right. So now we're going to go ahead and look into, the morning star, right? I did mention the morning star. So let's go ahead and look into the morning star now. All right. So let's go ahead and find another place where I can draw. Now, these are all confirmations that I do like to use, okay? So you guys can go back in the market, go ahead and make sure you guys are looking at these confirmations yourself, all those good things. All right, so Morningstar. Okay, so what is a Morningstar, right? The Morningstar is a 3-candle bullish reversal pattern, right? That you can see at support, of course, support or resistance, okay? So normally the first candle has to be bearish, right? It has to be bearish. The second candle has to be a small range, and the third candle has to be higher at least higher than 50% of the first candle, right? Okay. So that's what it is. All right. Like I said before, you don't have to worry about the wicks. I said, don't worry about the wicks. The wicks are not important. A wick being longer than another candle has nothing to do with the strategy or the Japanese candlestick. All right. So firstly, we get bears into the market. So let's not just redraw it. Let's just clone it. All right. So we get our first candle. Let me go ahead and draw this out. So it's right here. Perfect. Right. Our second candle is going to be like a doji. So you're not even going to really see it like that. It's going to be very, 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 very tiny. Like you can't, like, it's going to be just like that. But let me zoom in so I can draw it out better. All right. So this is going to be like an indecision candle. Going to be an indecision candle there. And then let's go ahead and draw out the next candle, which will, well, let me lower this. Cause that's too high. It needs to be like right at the price. Yep. And then make the wick smaller. There we go. That looks better. All right. And then let's go ahead and clone that again. And this is going to be a bullish, right? So this is the morning star, okay? So you need to see this formation right here. The first candle is bearish, okay? It has to be bearish. The second candle is a small range, most likely going to be a doji, right? And then the third candle, okay, it has to be at least 50% higher. So it can look like this. It can look like this, like 50%. That's 50% higher, right? But it cannot look like this. Too small. It can't be too small. It has to be at least 50% or greater, right? For it to be a morning star. Now, do I normally use this? No, I don't really even mention it. But I want you guys to be exposed to different types of candlestick formations, even if it's something like I don't really use, because maybe you might like it. You might see it more often in the market than I do. And it's also good to just know these things so you guys can look at certain patterns for reversals and all those good things, right? Because it's important to know your Japanese candlesticks, because these will give you certain signs of like reversals and all those things like that, right? So you guys know what exactly is going on, right? And the opposite of a morning star, right, is you guys are going through the market here and you guys are flipping through the 1, 2, 3 engulfing, the morning star, the inside candlestick, the hammer, all those good things, right? And all of these are most likely, well, let's go over, right? This is a bullish reversal pattern, the hammer. 1, 2, 3 engulfing is anything, right? 1, 2, 3 engulfing is my most versatile pattern. Trend continuation, reversals, re-entries, all that good stuff. Inside candlestick is kind of the same way. I don't use it to scale in, but I do use it for continuation and I do use it for reversals. Morning star is a bullish continuation pattern, right? So you will only want to be looking at for that for buys. And of course, the reversal of that is the evening star. So it's the same thing. but in reversal terms. So if you guys want to see a visual of that, let's go ahead and look into that, right? So this is the evening star. So let's go ahead and clone that. Our first candle is going to be bullish. It's going to be our first candle here. We kind of get that same doji, right? Doji looking candle here. Nice range. Let me see if I can grab it. No, it's too small. All right. So let's go ahead and just redraw it from here. Okay. So we have that there. Let's draw it up in the zone. Small little range there. Boom. All right. Oh, what's going on with that candle? Huh. Move that. Go ahead and draw this out again. Good. Okay, so now it wants to do that. Okay, it's fine. Just ignore that. Just ignore the line. All right, and then now we have our bearish candle. So same thing. It's the same exact thing, but this is called the evening star, right? Just like that. So morning, evening, just like that. So this is a bearish, and bullish. Bullish, bearish. So you want to trade this at support or retest of support, and you want to trade this at resistance and the retest at resistance. Okay, guys. Now, lastly, I want to talk about wicks. Okay, so we have confirmations here. Let me make sure I didn't miss anything as far as like any other candlestick that I can think of that I use. There's multiple. There's like dozens of Japanese candlesticks, but there's just certain ones that I do like to use. You know, there's like the three soldiers, and like there's a bunch of crazy candlesticks that I don't use and I rarely see in the market, so I don't even think it's worth mentioning. So let me go ahead and see there. I think there's like one more that I'm missing. I'm trying to think. Okay, I don't think it's anything here, so let's go. Oh, I did miss something. This shooting star. That's what I missed. I skipped over it. I was supposed to talk about it after the hammer. All right, so the bearish, right? The bearish signals to look for. This is called, right, the shooting star right here. So let's draw it out. You guys should know what this candlestick is. I'm pretty sure you guys have seen it multiple times, all that good stuff. Let me get my water. All right, so what happens with the shooting star, right? So the market opens like around here. Bulls start to come into the market. Same scenario, just like the hammer. Okay. So bulls start to come into the market. This is like how it's gonna look like in live action, right? So we have an opening candle here. Bulls come into the market, right? And they are in control. You see them in control. they're pushing higher, and it's hitting resistance. And you see that the bulls are taking over. They're starting to take over the market. It's breaking past the resistance here. And what happens is once we hit the resistance, bears start to come in and take control, giving us that long wick and then giving us a small body right here, which is bearish. Right? And that is the shooting star there. And you would enter the trade right there. That'll be your confirmation there. Okay. So pretty simple to explain. That's pretty much it. It's just very high candle reversal of resistance where bulls are taking over, and then bearish at the last minute, they just come in, they tank the market, giving us that long wick plus the bearish body, right? And that would give us our candlestick to get into the market. Right, so those are all the candlestick patterns that I wanted to cover for this video. And then now, lastly, let's go over the wicks, because the wicks are also very important at this point, right? Because we don't normally look at the wicks for Japanese candlestick patterns, but what I do like to look for the wicks for are multiple rejections at zones, right? So I also look at the wicks. Wicks are very important, guys. It's good to read wicks. So let's say in the market, we have like multiple touches of support, right? So we have a touch here. Fix that. There we go. And we have a long wick here, right? We have a wick here. It's just giving us, you know, different signs, different cases of different wicks, right? We have multiple rejections of wicks here. Right. And what normally happens is the market gives us these wicks, right? So let's say this is support. So this is bearish, right? And it'll look like something like this. There's a wick there. Let's clone this. Bearish tried to take over the market, right? Bearish tried to take over the market. What happens is they try to take over, and then we get this long wick rejection here, and this turns into a bullish candle, right? Turns into a bullish candle, or we get this same type of bullish candle here. So the market tried to get pushed down, try to get pushed again, right at that support. Let's go ahead and line this up. And then we get a nice long wick like this, right? We get a nice long wick like this, which is also what we just covered, which is our hammer, right? It gives us our hammer. So not only that is giving us a nice hammer, it gave us an engulfing, but we have multiple wick rejections, right? We have one wick rejection, two wick rejection. This is also a wick rejection, right? This turns into like some sort of a doji. So we have some sort of a doji here. So let's close that price right here. Right, we have some sort of a doji there. And then we have another wick rejection, right? We have another wick rejection. So multiple wick rejections, wick rejection. And you guys can, I like to see 4 wick rejections, 3 to 4. When I see 3 to 4 wick rejections, I know it's a strong level, right? Especially when I see like these long wick rejections right here. The second candle, this beautiful one right here. That's when I really know that we're at a strong level. When bears or bulls really try to take control of the market and they're like, nope. And they just push the market all the way back. Plus giving us like a big body to either cover the previous candle or give us an inside candlestick pattern, right? So wicks are very important. You guys want to read wicks. You guys want to look at the wicks, see how many times it's testing the zone, how many times it's rejecting it, and you're saying, okay, so this is a high strong resistance, our strong support area that I need to get my entries in so I can continue either a trend continuation or get into that reversal, right? So make sure you guys are not, pay attention to your wicks. The wicks will tell you a lot, especially when you have nice long naked wicks like this. I mean, the bodies, the candles. This gives you a lot of information on who is actually in control of the market, right? Reading the wicks like this. Okay, guys. So that's pretty much covering the wicks there. And yeah, so this is pretty much, a very, very detailed beginner video on Japanese candlesticks. Pretty much what I think is important to you guys. I can sit here for another hour and a half and talk about the rest of the candles, but you don't really need that, right? You don't really need to. If you want to learn them, you can go ahead on your own time and search up any other different Japanese candlesticks. But these are the ones that I see the most in the market. And these are the ones that I actually use besides the evening and the morning star. I don't really use these, but I do see them in the market at times, right? Because they're kind of like my 1, 2, 3 engulfing in a different way. So that's why I wanted to mention it. So yeah, so go ahead and rewatch the video, understand the candlesticks. All right, guys, so we're back. All right, so everything pretty much that I'm going to explain, most of the time I'm just going to be drawing it out so you guys can get, that detailed picture of how we're going to trade support and resistance using the zones, the trend lines, and dynamic support and resistance, right? So first of all, let's go off of trading support and resistance on zones, right? So what do you want to look for as far as like when you get to these major zones, right? Well, firstly, you want to look for confirmation. Obviously, you don't want to just get to these zones and buy and sell, right? So for example, right, let's say we have a nice support here. All right. And there's two ways we can trade this, right? We can trade this during the trend continuation. So let's say we are in a very bearish market, right? How we be able to trade the continuation is we look at market structure, right? We don't want to just trade the reversal, because here the market is creating low highs and lower lows. I'm going to go ahead and switch that, and lower lows, right? So market creates another lower low, and then it'll create another low high, right? You can take out your fibs, you can mark up just to confirm that retracement right here. So you know that the market is creating beautiful low highs and lower lows. And what you'll do is you'll wait for that break, right, to retest, and you continue to the downside, right? But it's not only you just, buy and sell these things. There's a lot more that goes into it. But when you guys are here, right, creating that low high structure, you want to make sure that you have confirmation, right? So once you get back into the zones, right, you want to look for some sort of a confirmation to actually get into the continuation. And I like to trade the continuation because a lot of new traders don't know, right? When they come into the new trading world, one of the first things they see is support and resistance zones and trend lines, right? How to trade these things. And they get the impression that you just buy a support, sell a resistance. But they don't realize when you're in a heavy, trendy market, there's actually a better chance of the market breaking the support and resistance than actually showing signs. All right. And once it shows signs of support, then we're gonna talk about that too. But most of the time when markets are trending, right, and new traders don't understand lower low, low high structure, swing highs and swing lows, they just start buying, right? They add a buy position right at the support, thinking that it's going to reject it and continue up, right? But then what happens is it just continues to tank, and traders are so confused, right? They're like, oh, I thought you're supposed to buy support, sell resistance. Well, there's a lot more to it than just that, right? So when you guys are looking at the market, right, you want to look at the market itself, right? Is it trending, right? Is it trending? If it's trending, what you want to do is you actually want to trade the break and the retest, right? So let's say we're back in the market right at the support zone, right? Most of the time what happen is the market will probably reject once, right? It'll show one sign of rejection, giving us that nice bearish candle, right? So let's actually draw this out. Bearish candle right here. And what's going to happen is the market is going to react. Let's drag that out so it's even. Good. No, my line is not straight. There we go. All right. So what's going to happen is the market is going to come here and you're going to see the market push down. And then it's just going to show like a nice little wick here, right? Normally what happens is the market tests that support, right? It will show some sort of signs of support right there. So let's go ahead and clone that. So it's going to show some signs of support, right? So it's going to be blue. And this is when traders start to that's when they start to buy without knowing what's going on in the market. They start buying. And like, oh, okay, it's going to push back up. It's going to push back up, right? And it's pushing. And then what happens is the market starts to do this, right? Starts to give you that long wick. And then now we got a nice break here. Boom. Now the market is continuing to the downside. And how you want to trade this is you want to wait for confirmation. And my number one confirmation, you guys know, is to 1, 2, 3 engulfing, right? So what I like to do is when the market is pushing hard like this, right? And I see a nice break. Now I know what I want to do, right? So now I want to wait for that retest. So as you guys know, the markets here, right, for a bearish candle, the open is at the top and the close is at the bottom, right? For bearish candles, the open is at the bottom and the close is at the top. So we know now that we had a break and close of the zone, okay? So we're here. This is our next candle. Let's not put them too close together, right? So the candle was pushing down more, right? It was pushing down. And then this is also where traders mess up. They just start selling here, right? Without any confirmation. So now it starts to push back up and it's giving us nice bearish candles, right? So boom. Then I'll just wait for my next candle. I like to see rejection, right? So I would like to see the zone get touched and show signs of rejection. So we're here in the market. It would be pushing up. Traders think, okay, it's starting to come back. It's starting to go back bullish. And then what happens is it shows a nice wick. And then it closes, right, below the zone. It will close below the zone. And then the next candle will be my confirmation to get into the trade, right? It will reject that zone one more time, right? So it will give us another bullish candle. It will start to seem bullish. And then what happens is it gives us that rejection right off of the price. And I'll get like a nice long engulfing candle here. And that is my confirmation right here to get into the trade, right? Because you guys know I like to trade the 1, 2, 3 engulfing. So I get one candle, one bullish candle, right? This is for a sell, right? Then I'll get a second bullish candle. And then my last candle, which is bearish, has to engulf the number 2 candle. And that's my confirmation here to get into that sell, right? Because I'm looking at market structure and I'm seeing that it's in trend. It's in a strong bearish trend. So I don't want to go against that trend. Like the saying that trend is your friend. You don't want to go against a strong trend, right? And just start buying. It's best for you to wait for the market to create a lower low, low high, lower low, low high. What happens is it creates another lower low, comes back to that low high, right? And then it gives you some sort of confirmation. And most of the time that low high is right at the zone of that support that is now resistance, right? There's a big thing where market structure loves to become, right, support first, and then it breaks and it becomes resistance, right? Same thing for a resistance line, right? It becomes resistance, right? We get resistance off the zone, and then it becomes support to continue to the upside, right? So that's the key thing you guys want to recognize as far as when you guys are in the markets, right? You want to look at the market and you want to say, okay, it's a trending market and I do not want to go against that trend. So let me wait for break confirmation, right? And then I get my Japanese candlestick confirmation to continue to the downside, right? And these are the best ways you want to trade support resistance on the trendy market, right? Now, NTG, how can you trade support and resistance with reversals? Well, let's look at reversals, right? This is the kind of structure you want to see when it's ideal, right? When it's the most optimal to buy or sell, right? To buy at support or sell at resistance, right? The most optimal way, right, is, let's say again, we're in a downtrend. We're creating lower lows and lower highs, right? Now, what normally happens is the market will struggle, right, to create another lower low. So sometimes it will look something like this, right? And then we actually break, right? We break previous low high structure. These are the two big signs that the market is going to reverse, right? The struggle of breaking of lower low, or if you're in the uptrend, the struggle of breaking higher highs, right? So we're struggling to break our lower low zone and we broke previous low high, right? So these are big signs of reversal. These are the type of signs you want to see, right? That is the most optimal time to start actually getting into some reversal trading, right? So once I see signs like this is when I start to transition into, okay, when we get into that zone again, right? Because we're past the retracement. If you draw fibs, we're past the retracement area, right? We locked and closed above the 72. So this is not retracement. This is starting to be signs of reversal, right? So once I get back into that support zone, right, and this starts to play as support again, we just push down a little bit further, right? And normally what I like to also look for is wick rejections, right? So the market touched the support zone, right? It touched that support zone, looking very, very bearish, right? Looking very bearish. It looks like it's going to continue, but then it gives us that long wick like this, right? And it gives us a doji. These are like beautiful, beautiful confirmations right here, right? That first touch of that zone, and then boom, the market rejects it immediately, right? And then we test it again, right? It gives us an even longer push, right? It gives an even longer push. So we're here in the zone. Well, let's actually go here. There we go, right? So it gives us a longer push. So it gives us a longer push, right? And it's like, okay, yeah, it's definitely going it's definitely going bearish, right? It gives us a long push, and then it gives us another rejection right off of the zone. So we got 2 rejections here, right? So like, okay, this is a great sign, right? Even above the zone, right? And you're looking at the market and you're like, oh, this is a great sign that is giving me to start getting into a reversal, right? And then not much, it didn't touch the zone too much, right? But what happens is it gives us like another bearish, right? It's looking bearish, bearish, bearish candle. And then boom, it starts to go bullish, right? And it gives us that nice confirmation to start buying. This is the most optimal time you want to start buying the market, right? We had a trend in the market. The trend did not continue, giving us a nice like a double bottom, right? It did not break low structure. Then it broke previous low high structure, right? So once we get back into that zone, this is ideally when now you want to look for reversal trading. And another way to trade, support and resistance with reversals is when the market is consolidating, right? So I'm just giving you guys the different scenarios on how you want to trade support and resistance this way, because these are the most optimal ways, right? So this is another way, right? We can look to trade support and resistance is when the market is ranging, when there is no trend, right? We're just going up, going back down, going up, and back down, going up. And so these are the best optimal times to start trading support and resistance as well, right? You just wait for your confirmation. You can sell, you can buy, right? Because the market is ranging, so there's no pressure, right, that the market is going into. And the market is going to continue to range like this until, of course, it breaks either to the lower or to the higher side, right? And you can take advantage of a consolidating market like this, trading the range and just waiting for those confirmations, right? Which is my Japanese candlestick. Whatever your confirmation is, that's what you want to wait for to continue to trade that support and that resistance here, right? Same thing here. All the same thing as far as in a bearish market, right? And we can go over quickly, right? A bullish market, right? So let's go ahead and get the example of a bullish market. So we're making higher highs and high lows, right? Now, you guys tell me, once we get back to this resistance, right? Do we want to wait for continuation, or do we want to look for signs of reversal? Okay. And if you said signs of reversal, very good. Okay. We did not break, right? We struggled to break previous higher high, right? And then we broke previous high low, right? So if we draw this out, we had a nice higher high here that did not break, right? So we didn't break higher high. And then now we broke previous high low. So if we were to draw fibs from here, which we're supposed to do from the high low to the high high, you'll see that we are beyond that retracement level, right? Beyond the retracement level. So this is going to give us our key sign for a reversal. And then all we have to do, of course, is wait for our candlesticks, right? So in the bullish market, we want actually 2 bullish candles and 1 bearish, right? 1 bearish engulfing. So market is here. It gives us that 1 blue candle. This is the first one, right? Right off of the zone. Boom, right? That's 1. Come around again. Gives us that second, right? It gave us that push up. And then now we see signs of rejection here, right? That's 2. And then one more time here. See if we can grab that. Yep. So it looks like it's pushing up. giving us a wick. And then we get that confirmation for a sell, right? And then of course, if the market was continuing to make higher highs and higher lows, we will trade the trend continuation. Okay, so these are the ways that you can trade support and resistance at zones. Okay, at zones. I know a lot of traders that get into the markets, new traders that get into the market, and they see these things, right? And they don't understand that there's more to it than just buying and selling, right? You have to look at trend, overall direction, market structure. Is the market ranging? Is it in trend? There's a lot of different things you have to look for. Japanese candlestick patterns, right? Wick rejections. There's multiple things you have to look at in order to use the optimal way to trade support and resistance zones, right? All right, guys. So now we're here. Now let's talk about dynamic support and resistance. So what is dynamic support and resistance, right? Dynamic support and resistance is the use of the moving averages that you can find areas of support and resistance, because moving averages can act as support and resistance as well, and you can trade them for trend continuation. I like to trade them personally for trend continuation, but you can also catch great reversals, right? And we're going to talk about the dynamic support and resistance kind of like the same way how we can confirm trades in the market using, you know, the zones, right? So we're going to use the same way for dynamic support and resistance, right? So what you want to do is you can add any moving average. It doesn't matter, any time frame, the settings, whatever, right? But what I like to use is I like to use the 100 SMA. I'm going to be using the 15-minute chart for an example, but I do like my higher time frames like the 1 hour and the 4 hour, right? But I was just getting more signals to get in and get out on the 15-minute, right? So normally what you want to look for, trend continuation or reversal trading. So here, for instance, right, we're going to look at some reversal trading. So we actually had a ranging market, right? So it's ranging. We're getting sells. We're getting a break of the SMA, not giving us confirmation for buys. And then we had another break here. And then we had the retest of the SMA, right? Giving us a confirmation for sell, right? So you want to utilize that break and retest for that reversal trading to get into the sell. As you can see, the SMA gives you a great entry, beautiful entry, right? Gives us a beautiful entry to continue to the downside. A huge drop. And you guys know I love to trade. This is how I like to, my old strategies when I used to love re-entering the market with a smaller moving average, right? So this is how I love to scale into the market using my 15 EMA. My OGs remember this strategy right here on gold, right? I'll just use that 15 EMA because I love it, because it's hugging price tight and it will get me those nice re-entries. You guys know that. And we're continuing to the downside, right? We had a nice bearish trend. Now we're starting to reverse, right? And as you can see, we had the break again, and we had the retest giving us confirmation for a buy. Beautiful right here. You bought the market, you just waited a little bit, and then again gives you those nice entries, nice long entries here. Again, a break, retest, beautiful sell. And you can look for confirmations this way. You can trade the reversals, or you can trade the trend continuation, right? So now we're in a downtrend. We're in a nice downtrend here. And what we can do is we can look for the trend continuation, right? And we can look for the retest, right? So we're in a downtrend here, creating that pattern. And then we get the retest here again for that trend continuation. And we can sell. We can continue to sell down, right? You guys want to use that EMA right there for re-entries. This is just normally how I like to trade. I'm just explaining just small details on how you can trade support and resistance, right? Then we come back to the SMA. We get a break, right? But we come back to close below it. And then it gives us another confirmation right there to get into another sell, and the market drops, right? And I wouldn't rely on dynamic support and resistance alone, right? You can trade the indicator with it alone, but you would definitely want to utilize more confirmations with the dynamic and support and resistance, right? But trading this alone can be very profitable, right? But not for new traders, because for new traders, they kind of get like mixed signals. They're not really familiar with the market. And so what happens is when the SMA starts to consolidate, right, and it's giving you multiple signals to buy and sell, traders get confused. They don't know if they want to buy, they don't know if they want to sell, and they're not familiar with the market structure. They're not familiar with price action. So you want to just work a little bit on more confirmations using dynamic support and resistance before you utilize it. But moving averages are great tools. They're great, like if you're using the crossovers, like 2 EMAs, using the crossovers for confirmation. If you're using chart patterns with the EMA, so you have the break of the chart pattern or the break of the zone with the break of the EMA, that will give you more confirmation. You can just use it simply for trend direction. Like if you want to just know if you're in a bullish or bearish market, that's also great ways you can use the moving average. All right, guys. So dynamic support and resistance, very, very simple. Very, very simple concept. You know, you can trade it with the trend continuation, or you can wait for the break, the retest of the SMA, just like support and resistance zones, and you can trade it that way, right? So let's talk about the last thing that I wanted to cover, which is support and resistance with trend lines. Now, this is a very, very rare breed. I don't see any traders trading this way, but I do like to draw out my trend line, support and resistance, right? And I like to confirm it with my zones. So let's go ahead and take a quick look at trading the trend lines, right? So what happens is the market likes to create trend lines here as support and resistance. Now you guys see we had a nice chart pattern here. So let's just draw that out, right? We had a nice flag pattern here. Nice flag pattern that broke structure here and then tanked to the downside, right? And this is what I mean by, you know, confluence your dynamic support and resistance, right? We had confirmation here and then we had a break confirmation, right? But for trend lines, right? Normally what happens is traders don't actually, you know, see the support and resistance that these trend lines can play, right? What I like to do is I like to extend it out, right? And there are cases where the trend lines, instead of the zones, the trend lines can act as support and resistance, and you can use the zones to confirm these trend lines as support and resistance, right? Because we had resistance here, and you guys see how that evens out with the trend line. So we know that where this trend line is at the most optimal place for us to look for confirmations for buy and sell, right? And if we extend it out more, as you can see, the market is reacting to the trend line, right? Because if we look left, we don't have any zones, right? We don't have any zones. And I love using these as reference, as guides into the market for me to continue to the downside, or I wait for the break of the trend line, retest it, and continue, right? Because trend line breakouts are they get you in some beautiful sells, right? On trend line breakouts, I have my best days on those, right? So we're looking at just the support that we can build off of the trend line, right? And normally what happens is we break it. It's the same concept, right, as zones. When you break a support, it becomes resistance. So the same thing with the trend lines, right? We have a trend line of support. We have multiple touches with confirmation. We have wick confirmations. We broke the trend line. Once we came back to the trend line, right, with the zone, right? So we having two confirmations. Not only do we have trend line support that's going to become resistance, we had zone support that can also become resistance. So we're just like adding confirmations, right? And that's what you want to do as a trader. You want to keep adding confirmations. So you have 3, 4, 5 different signals for confirmations that's going into the same direction, right? And these are optimal trades. These are quality trades. And that's what I tell you guys all the time, is it's about quality setups. It's not about the quantity, okay? You don't have to trade 100 times. You don't have to trade 50 times. You don't have to trade the market every single time. You have to be in the market 24/7. No, you can literally trade once a week. You can wait for that quality setup, right? Because I don't trade that much. I trade 2-3 times a week max, right? And I just sit in the market and I wait for my quality setups. My members know when I'm in the Discord, I'll send out my analysis and they'll say, hey, NTG, what are you looking at? And I'm like, I'm going to wait on the 1 hour. I want a quality setup. And they know I stress that so much. Quality, quality, quality. And that's what's going to improve your trading when you start to take quality setups. Not like iffy setups that have 1, maybe 2 confirmations. It doesn't look that great. That support is not that strong, but you know, I want to trade, so I'm just going to place a trade anyway, right? You want to have quality setups. And once we got back to these zones here, you can see that we're having a lot of resistance here, resistance. Now, we didn't get any confirmations, but as you can see, the market did react to it. And let's see if we can actually get some sort of reaction here. No, we didn't get up there. All right, so let's see if we got up there. I'm just dragging it now. But let's see. Well, let's see if we got up there. I want to say we got close. Yeah, we got close. We got close there, but you don't want to force it. We could force it here, right? Off of that support. But we don't want to force our setups right here, right? But you guys kind of get the idea of, you know, now how to trade support and resistance zone. All right, you guys, so that's going to be it for this video. So we went over drawing support and resistance, what support and resistance is, trading view tools. We went through Japanese candlesticks, how to trade. So for the next video, for lesson 3, we're going to be doing chart patterns. We have chart indicators, and then we're also going to be working on top-down analysis. So how to do proper top-down analysis. So analyze from the daily time frame all the way down to as low as the 1 minute time frame. So how we can get entries there. So this was just basic price action, so you guys can learn how to draw support and resistance. And then the next one will be a little bit more advanced. So we're going to be talking about trend lines, chart patterns, like the triangle, wedges, flag patterns. We're going to be talking about a bunch of different chart patterns and how to do top-down analysis. So the next lesson is going to be very, very advanced techniques, very, very detailed. It's going to be a very, very long video. So I hope you guys are enjoying the series of the full course. If you guys are, make sure you guys hit the like button for your boy NTG. And I'll see you guys in lesson 3. Peace out.